Hello and welcome back to my channel. My name is Adiola Adewoyin. Now, why should you consider owning a mortgage property in Nigeria, especially in Lagos, Nigeria? Are you tired of paying rent, spending millions of naira on rent annually, or are you looking for an investment property and you do not have all your funds together? Now, a mortgage property could be a game changer for you. So in this video, we are going to break down how mortgage work in Lagos, why they are a smart investment choice, how you can qualify for a mortgage, and the benefits of paying gradually for your property. So stay tuned. And if you haven't subscribed to our channel, this is the right moment to do so. Kindly subscribe to our channel. A mortgage is a loan, a property loan, that allows you spread payments for your property over several years. So instead of paying upfront, you have the opportunity to pay monthly while living inside that property. So how does mortgage work in Lagos, Nigeria? One, you choose a property. You decide on the property that you want to buy depending on your budget. And then you also choose a mortgage bank. We have several mortgage banks with favorable terms. So you choose the mortgage bank that suits your terms. That is number one. Number two, you pay your down payments. Typically, you are expected to pay 20 to 30% upfront payments. That is 30% of the property price, the property amount you are expected to pay. Because a mortgage bank can only offer you up to 60% or 70% of the property amounts that you are seeking. So you are expected to make some payments. That is like 30% of the property amount. You're expected to pay down. And then number three, you pay in installments. So monthly you have to pay the principal, that is the loan amount, and also the interest. So we have some mortgage banks, they offer fixed rates. That is, the rate you'll be paying monthly is same. It doesn't change. And we have some that are variable, that monthly payments change over time. So you have to be careful. You do your research. You have to be careful in the mortgage plan that you choose. And then finally, you own your home. Once the mortgage process is completed, once you pay your down payments, once the mortgage bank releases the other payments, then you move into your home, and voila, you are a property owner without having to pay upfront. Why mortgages are a smart investment choice? One, affordable home ownership without large upfront costs. You have the opportunity to pay for your property, either you want to live in or for investments. You have the opportunity to pay in installments without having to pay huge bulk of money. And then it also protects you against rising inflation rates. That is, rising property prices. You have locked down that property with an amount, with the mortgage loan. So either there's inflation, either property price goes up, you are not affected. The mortgage bank or the property owner will not, or the developer rather, will not come later to meet you to say, oh, the cost of building materials has gone up, oh, there's inflation, oh, we have increased our prices, oh, we are going to add to your money. No. So you have an edge against inflation. You have an edge against property rising, yearly. And imagine you have 30 years, 20 years to pay your mortgage. And over 30 years, imagine what the amount of that property that you have locked down with a certain amount is. Two, you have better cash flow management. So instead of tying down all your funds into paying for a property, you have the opportunity of paying gradually, and you can use your money, your other funds that you could have tied down for payments for that property. You can use it for other investments, for other business expansion. So you can maintain your financial flexibility while building your real estate assets, while building your property portfolio. Number three, You also build your equity over time. So as you're paying mortgage monthly, you're increasing your stake in the property. Unlike for rent, whereby you pay rent every year and that money is gone. You do not own the property. But for mortgage, once you are paying your installmental payments monthly, you increase your stake in the property, whereby yearly, you are building wealth. You are building as the property appreciates, you are building wealth over time. 4, stable and predictable payments. Unlike rent, where your landlord can just decide to increase your rent at any time, with mortgage, you know that you have fixed payments monthly, yearly. So you finish your payments, and thereby you are able to plan ahead. You know that what you are paying is fixed. There's no increase of any kind. There's no shock, of increase of any kind. And you're able to plan your finances ahead. 5, opportunity to earn rental income. With mortgage property, your tenants can pay off your mortgage loan while you enjoy capital appreciation. Either you are going for short-term rental or long-term rental. For short-term rental, your Airbnb guest, the rental income you get from them can pay off your mortgage loan. And if it's long-term rental, that's annual rental, your tenants can also pay off part of this loan, and you're at rest. You're building wealth passively via your mortgage property. Real estate is one of such investments that can give you, passive income, while you build wealth. Number 6, improve your credit worthiness. So taking a mortgage and repaying it consistently boosts your financial credibility, making it easier for you to get loans for other investments in the